Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, December 17th, 2025. I am Frank Ochoa, aka PivotBoss. Happy hump day, everyone. Here's a look at the ES in the daily time frame right now. 14-day narrow range, about 3 weeks here of compression here for the ES. That's basically the entire month of December plus a day of November. That's 400 points of energy built up into this range. It's pretty significant here. You can see again, that range right here has been building out all month long. You have a range of just 100 and, let's see here, let's bring this back, about 126 points of range. That's significant right there because, again, this market tends to average about 300 points on that same amount of days. And whenever you're this compressed, you'll tend to go beyond that 300 point projection by maybe 25% or beyond, and that'll put us close to that 400 points of range. So 389, call it 390 points here on the 125% estimate, but you can also see raw number here. It's hit 400 points recently on a number of occasions, most recently on the drop here and on the rally back up. Now we have 400 points of range yet again. So this thing building up big time here for a potential move ahead. However, do we see any kind of movement here to end the year, or are we going to continue to be mostly range bound here heading into 2026? Thursday and Friday could be big. We have CPI data and core PCE price index on those days. That could provide an expansion opportunity. If not, we may be stuck for a little while. All right, looking real quickly here at the NQ. This one right now also showing a bit of range-bound price action. Got a little bit of elongation here and then snap back, but still overall within this range here. This range has developed within the larger range back here. So it's just not, at an edge where you can really do business right now. When you're kind of stuck right here in the middle, you kind of have to wait for a price to get to one of these extremes before maybe making that move back. So again, something to consider here as this market remains mostly between the boundaries of that larger extreme here. Now, keeping an eye here on crude oil. Did crude oil put in a low yesterday? Did it put in a low? Did it finally capitulate? When price was dropping here pretty early on through that 56 level, we were watching it to see how it would take out that level. Did it finally take out the 55 12s? And it finally did. And we talked about this becoming a capitulation day that might mark the low finally. So it took out multi-year lows. It bounced here already today with a great bounce back day of already 100+ percent of ADR. This right now is set to a 14 days. So if I bring this back to 1 day measurement, you can see 109% of ADR already on the bounce back day. So is this a lower low failure? If this market can reestablish acceptance above 56s, there's a shot to bounce back to 59 and 64 up above. So watching to see how this thing plays out down here. But the low could be in, especially given the seasonal bullish shift from a bearish bias to a bullish bias heading into the end of the year and into the beginning of next year. We've seen those seasonal data points here, and right now we're right in the thick of the potential to rally. All right, looking at gold futures, this one remains highly bullish as well. We mentioned before that a breakout through the top of this range could open up a move into 4,400 and 4,500 up ahead. It's gotten a nice continuation, but right now, coming just shy of 4,400, 4-day narrow range here. We could also bring this up to a 4-day reading, and there it is right there. Not super compressed, but for the most part, it is a 4-day narrow-ish reading. We could continue to see a sideways to up move. The expectations for another breakout and a continuation. 4,500, the easy upside target here for gold as it continues to trend steadily higher. All right, looking at the YM here, this one has been stuck within a 4-day range at these highs. This is after the recent pop on Fed Day. You had your FOMC key level here. The thing popped for a couple of days and has held ever since. This one has been leaning to the upside quite a bit lately. You can see how aggressive the turnaround has been to new highs for these markets, whereas ES and NQ just haven't gotten to new highs. This one did push to a new high, holding there now. We do have a great, let's see here, we do have a great key range that is developed as well. That's right here at the 48.5 level down to the 45.7 level, back up to the mid. So it's hanging around right near that key range high. A failure to hold that 48.5 here starts to open up a return back to the middle of that range. That could be something to keep an eye on up ahead. But this market remains bullish. Even if it did rotate down, it's been a buy right back up as we've seen before. All right, let's take a look here at Bitcoin. Bitcoin here, watching the previous session's high. If there's a failure or a rejection of prices above that high, do we go outside day down? This market is on the cusp of big time weakness, a failure to hold 84K, and we're opening up some big time downside. If it can hold 84K for now, we may bounce it back toward 94, 95 and stay in the range. Needs above 95K for a major rally, needs below 84K for the next major wipeout. Looking at ETH, this one remains highly bearish at the moment, still trending down, sitting right on that 2,900 market structure level. That's a big time level there. A failure or a transition day through 2,900, and you open up the move into 2,150 down below. By holding 2,900 or thereabouts, you can stay in the range up to 3,650 for now and stay inside that market structure, which has been the case since early November. But as of right now, still trending down and still at risk of another wipeout move up ahead. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.